Welcome to Griffonomics, where we conduct financial investigations to define the risk before we look at the reward. Today, we're diving into Axyv, trading under the target ticker MSL. Axyv is executing a highly anticipated public market debut that spins out mission-critical, solid rocket propulsion assets from its parent umbrella, L3Harris.
Right.
However, this strategic carve-out exposes a stark macro tension, positioning a high-growth, asset-heavy chemical duopoly provider against aggressive, software-first private tech disruptors racing for the exact same defense budget wave.
Yeah, and that tension is exactly why we're doing this deep dive today.
Exactly, because, look, I want you to imagine something for a second. Imagine a $4 million Patriot missile, right?
Yeah.
It's packed with, like, the most advanced artificial intelligence targeting sensors on Earth.
Oh, absolutely. The pinnacle of tech.
Right. I mean, it's capable of calculating intercept geometries in literal microseconds. Now, imagine that absolute pinnacle of human engineering just sitting completely useless on a launch pad, entirely undeployable.
Because it has no engine.
Because it has no engine. Because, someone in a windowless factory somewhere couldn't bake a giant tube of explosive rubber fast enough.
It sounds absurd when you put it like that, but, well, that is the bizarre and honestly terrifying reality of the modern defense industrial base right now.
It really is. I mean, it's the defining contradiction of how we fight wars today, isn't it?
Oh, without a doubt. I mean, think about it. We have spent, the last 2 decades obsessing over the digital domain?
Yeah, software, cyber, all that.
Right. Autonomous drone swarms, networked command structures.
Took over-the-air updates for jets.
That's exactly. 6th-generation stealth capabilities. Basically, we all fell in love with the software of war.
We did. It's shiny. It gets the venture capital money.
But the entire physical velocity of its actual, tangible ability to intercept an incoming ballistic threat is fundamentally choked.
Choked by what? Exactly.
By a 20th century chemical manufacturing bottleneck.
Right.
You can have the best radar in the world, right? But if you run out of physical interceptor missiles to shoot down the threats, well, your software is irrelevant.
It's totally useless.
Yeah.
Which brings us to solid rocket motors, SRMs. And this is why we're dedicating this entire deep dive to unpacking Axyv. We're going to look at the mechanics, the financials, and some really deep structural risks here.
Because they operate right at the absolute epicenter of this physical choke point.
Exactly. And they are doing it right ahead of an imminent public market debut.
Which is huge.
Right. So our mission today is to understand why the U.S. government is quietly wiring $1 billion into this specific company.
A literal $1 billion.
Yeah, $1 billion. Direct to the company. We're also going to look at how Axyv plans to defend its turf against, well, a tidal wave of Silicon Valley challengers.
There are a lot of them coming for that exact market.
And ultimately, we want to figure out whether this highly engineered stock deserves a place in your portfolio.
So, to really grasp the financial opportunity here and the systemic risk, honestly, we have to completely dismantle the way most people think about defense contractors.
Break that down for me, because when I think of defense, I just think of the giant logos on fighter jets.
Right, exactly. Yeah. When you or I think of a defense company, the mind immediately goes to, like, a missile fuselage or a stealth bomber.
Lockheed, Raytheon, Boeing.
Exactly. But Axyv does not operate in that flashy, highly visible top layer.
Okay.
We really need to segment the defense industrial base into distinct tiers because, the economic realities of each tier are wildly different.
Let's do it. Let's break those tiers down, because understanding where Axyv sits is like the only way to understand their monopolistic moat.
Right.
So tier 1 is what everyone knows, the prime integrators.
Lockheed Martin, Raytheon, General Dynamics.
Right. They are the household names. They win the massive, multi-billion-dollar government contracts to deliver a finished weapons system. But a common misconception I see all the time from retail investors is assuming these Tier 1 primes are Axyv's competitors.
Oh, they are absolutely not competitors.
Not at all.
No, they are Axyv's captive buyer network.
Captive buyers. I like that.
Yeah, because, look, a company like Lockheed Martin does not pour the chemical fuel for its own Patriot missiles.
Wait, they don't?
No, they're integrators. It's right there in the name. They build the radar, the software, the aerodynamic fins, the final assembly.
Okay, so they put all the pieces together.
But they cannot complete that assembly without buying the physical propulsion engine first.
From someone else.
From a Tier 2 supplier.
Got it. So they assemble the final product, but they don't make the muscle that actually makes it fly.
Precisely. Which brings us to Tier 2.
And this is Axyv's domain.
This is where Axyv lives. Tier 2 consists of specialized component providers.
So these are the, like, asset-heavy, heavily regulated subcontractors.
Yeah. They own the physical, unglamorous bottlenecks of the defense supply chain.
Heavy hard goods.
Exactly. Propulsion systems, specialized titanium structures, that sort of thing.
And then below them you have Tier 3, right?
Right, Tier 3, which we will get into later.
The private tech disruptors.
Yeah, the venture-backed players trying to leapfrog the legacy timelines.
Okay, so focusing squarely on Tier 2 for a second. You mentioned earlier that Axyv operates in a space fortified by an ironclad moat.
Oh, it's practically impenetrable.
Because it's not a free market, is it?
No, not at all. The domestic solid rocket motor market is not a free-for-all capitalist enterprise. It is a legally protected duopoly.
A legally protected duopoly. Just two companies.
Just two. If the United States government wants to procure large-scale, tactical, and strategic solid rocket motors, they basically have two choices.
Axyv being one.
Right. Axyv, which is inheriting the massive legacy manufacturing footprint of Aerojet Rocketdyne.
And the other one?
Northrop Grumman, who cemented their position in this specific duopoly by acquiring Orbital ATK back in 2018.
So it's literally just Axyv and Northrop Grumman splitting the entire pie.
Yes. The Pentagon intentionally splits its procurement budget between these two giants.
Why do they have to do that? Why not just pick the cheapest one?
Because they need systemic redundancy. Think about it. If they give all the contracts to Axyv, Northrop's factories shut down.
Oh, right. And then all those specialized engineers get laid off.
Exactly. And suddenly the U.S. loses half its capacity to build missiles. So they have to feed both sides to keep them alive.
That makes sense. But here is where the narrative around Axyv gets truly fascinating to me.
Oh, yeah.
Yeah, it's not just that there are only two companies allowed at the table. It's what the industry calls the qualification moat.
Ah, yes, the qualification moat. It is perhaps the single most misunderstood barrier to entry in the entire defense sector.
It's crazy.
And it is the absolute bedrock of Axyv's valuation thesis.
So let's talk about the nation's most vital, high-profile missile platforms, right? We're talking about the Patriot PAC-3 MSE.
The premier air defense interceptor.
Right. Highly advanced, hit to kill. It protects cities and bases all around the world. We're also talking about THAAD, right?
The Terminal High Altitude Area Defense System.
And the Tomahawk cruise missile.
The marquee program.
Exactly. The marquee programs of the American military arsenal. And if you read the documentation, it is incredibly explicit. These weapons are strictly legally qualified around Axyv's precise factory blueprints.
The word qualified in aerospace engineering, I mean, it carries immense legal, financial, and technical weight.
What does it actually mean in practice?
It means the entire architecture of the missile was designed, tested, and certified by the military using an engine built specifically in an Axyv facility.
Using their exact process.
Exactly, using their exact chemical mixing process. It encompasses the thermodynamics of the burn, the specific weight distribution as the fuel depletes.
The exact thrust profile.
Right, and even the vibrational resonance of the engine casing during flight.
Wow. Okay, so put yourself in the shoes of a competitor for a second. Let's say one of those Tier 3 tech disruptors comes along, some heavily funded Silicon Valley startup.
Yeah, sure.
And they walk into Lockheed Martin's boardroom, right? And they say, hey, we built a cheaper, faster, solid rocket motor for your Patriot missile.
It fits the same dimensions.
Right. Buy ours instead of Axyv's and increase your profit margins.
Lockheed can't just say yes and swap the parts, can they?
No, it is entirely impossible under the current regulatory framework.
Why?
Because swapping out a legacy Axyv motor for a competitor's engine inside an existing active missile program triggers a massive, agonizing recertification process.
Because it's not like swapping a battery.
A rocket motor is not a USB drive. It is not plug and play.
Right.
If you change the engine, you change the thermal signature, you change the center of gravity, you change the acceleration curve.
And changing any of that means the existing flight software might calculate an intercept trajectory incorrectly.
Precisely.
Yeah.
Which is exactly why the military would have to conduct multi-year, multi-million-dollar live-fire test loops just to prove the new engine works.
That's to prove that it integrates safely with the legacy software, radar, and aerodynamics of the Patriot system.
That sounds like a nightmare.
It is. No prime contractor wants to absorb the staggering cost or the years of delay required to recertify a weapon that already works perfectly well with the original Axyv motor.
You know, I was trying to come up with an analogy for this because the switching costs are just astronomically high.
I'd love to hear it.
Okay, imagine a world-famous bakery. And they produce this signature life-saving nutritional cake.
A life-saving cake. I like it.
Bear with me. But they are legally mandated by the FDA to use only one hyper-specific brand of flour.
Okay.
If the bakery ever wants to change the brand of flour, they don't just have to update their recipe card.
They have to do testing.
They had to undergo a 5-year, $100 million FDA clinical trial to prove the new flour doesn't somehow ruin the nutritional profile or cause a bad reaction when baked at 400 degrees.
So what do?
They never change the flour. That bakery is never going to change the flour. They're just going to keep buying the original brand, completely regardless of the price.
Because the switching cost is fatal to their business timeline.
Exactly.
That is a phenomenal way to visualize the inelasticity of the demand here.
Thank you.
Axyv is a merchant supplier operating a legally mandated toll booth.
A toll booth. I like that word.
As long as the Tier 1 primes are building these legacy missiles to replenish global stockpiles, Axyv captures a toll at the component layer.
They don't even have to win a new contract for the whole missile.
No, they just sit at the physical bottleneck and collect revenue every single time a Patriot interceptor rolls off the assembly line.
But, and this is a big but, this brings up a massive glaring contradiction that we have to reconcile before we even look at the financials.
Let's hear it.
If Axyv has this unbreakable monopoly, this ironclad, legally mandated toll booth, why are we talking about a crisis? Why is the government stepping in with an unprecedented $1 billion intervention if the business model is so secure?
Because while the financial model of the monopoly was secure, the underlying physical manufacturing methodology of that monopoly was fundamentally broken.
Broken how?
It was an archaic system entirely incapable of scaling to meet the reality of a sudden global conflict.
So they had the legal monopoly, but they literally couldn't build the stuff fast enough.
Exactly. And this is where the story shifts from financial spreadsheets to literal, highly volatile rocket science.
And some of the details regarding how they actually manufacture these engines are terrifying.
Truly terrifying.
We need to talk about the explosive rubber problem. Because I think most people assume a rocket motor is like a car engine.
It is nothing like a car engine. Or even a liquid-fueled space rocket, for that matter.
Right, no turbo pumps or anything.
Exactly. It does not have moving parts or valves that mix liquid fuel and liquid oxygen into a combustion chamber at the moment of ignition.
So how does a solid rocket motor work?
A solid rocket motor is designed for tactical reliability. It requires all of its fuel and all of its oxidizer to be pre-mixed into a stable, solid state.
So it's already mixed and ready to go.
Yes. So that the missile can sit in a warehouse or on the deck of a ship for 10 years, endure massive temperature swings, and then fire instantly at a moment's notice with near-perfect reliability.
Just hit the button and it goes.
Exactly. But the meticulous legacy process of creating this solid state is where the bottleneck truly lies.
Let's break down that process because the chemistry is fascinating.
Yeah.
Roughly 70% of the total mass of this solid propellant is an oxidizer called ammonium perchlorate, right?
Yes, AP for short.
So you take this highly reactive AP powder and you mix it with atomized aluminum powder.
Which acts as the actual fuel providing the extreme heat.
Right. And then you bind it all together with a liquid synthetic rubber polymer.
Historically, for decades, this has been accomplished using a painstaking manual batch mixing method.
This is the part that gets me. Manual batch mixing.
Yes. Workers in specialized, highly hazardous facilities would literally use giant mechanical mixing blades inside massive multi-hundred-gallon vats to stir this highly volatile chemical slurry.
I really need to pause on this for a second.
Sure.
We are talking about the most technologically advanced military in human history.
Right. Without question.
Building interceptors that can hit a hypersonic glide vehicle in the stratosphere. And the way they build the engine is by pouring explosive powders into a giant industrial kitchen mixer from the 1990s and letting a metal paddle churn it around for hours.
That is the stark reality of legacy defense manufacturing.
That is insane.
It really is. The slurry is incredibly viscous. Think of it like a thick, heavy dough.
Like bread dough, but explosive.
Exactly. It takes hours of slow, deliberate mechanical mixing to ensure the aluminum and the oxidizer are perfectly evenly distributed throughout the rubber binder.
And then what happens once it's finally mixed?
Once the mixing is finally complete, this explosive gray slurry is poured often manually. Utilizing gravity feeds into a carbon fiber or steel motor casing.
Around a core, right?
Yes, around a central star-shaped core mold.
And then they bake it. They put this giant tube of explosive dough into an industrial oven for days.
Sometimes weeks.
Weeks. Just to cure it into a hard, rubbery solid.
All right.
But here is the part that genuinely blew my mind when researching the production constraints. The X-ray Q.
Oh, the X-ray Q. It is the ultimate manifestation of quality control in an environment where the tolerance for error is absolute zero.
And zero tolerance isn't just a corporate buzzword here. It's a physical law.
A literal physical law.
So if the temperature in that curing oven fluctuates even slightly, or if those giant metal mixing blades fold the heavy rubber over itself,
And leave a microscopic air bubble trapped inside the fuel.
yes, it creates a void.
Yeah.
And we have to explain why a tiny bubble is so catastrophic. Because when a solid rocket motor fires, it doesn't burn from the bottom up like a candle, does it?
No, it does not. It burns from the inside out, starting at that central core and burning outward toward the casing.
And the geometry of that burn is mathematically precise, right?
Exactly. The thrust of the rocket is directly proportional to the surface area of the propellant that is actively burning at any given millisecond.
Okay, so what happens if the flame hits a bubble?
If the advancing flame front hits a microscopic air bubble, a void in the solid rubber, the surface area of the burn instantly expands into that empty space,
And more surface area means more fuel is burning simultaneously.
which causes an immediate localized pressure spike.
A pressure spike that the casing was never engineered to handle.
Precisely. The result is instantaneous overpressurization and a catastrophic explosion.
So the missile just detonates right there on the long trail.
It destroys the launcher and potentially kills the operators. Or it explodes mid-flight, completely failing to intercept the incoming threat.
That's terrifying.
It is. Because of that catastrophic risk, Axyv can't just bake the engine, slap a shipping label on it, and send it to Lockheed Martin.
Right, they have to check it.
Every single motor has to go through an agonizingly slow, non-destructive X-ray and CT scanning backlog.
How big are these motors?
Some of them are 15-foot-long metal tubes,
And they have to scan the whole thing.
inch by microscopic inch. They are looking for an air bubble the size of a pinhead buried deep inside thick, dense, radio-opaque, explosive rubber.
And what if they find a void after all that mixing and baking?
The entire multi-million-dollar motor is scrapped.
Unbelievable.
This is the operational reality that completely broke the supply chain.
Let's talk about the historical context for a second. Because in the 1990s, after the Cold War ended, the defense industrial base underwent massive consolidation.
Government encouraged consolidation, I should add.
Right. We went from half a dozen independent companies that knew how to cast and bake these motors down to just the two we have today.
Right. And for decades, while fighting low-intensity, asymmetrical conflicts in the Middle East, this manual batch mixing and the slow, agonizing X-ray queue was basically considered good enough.
But I have to push back on the complacency here.
Yeah.
I mean, we're talking about literal rocket science. How did nobody at the Pentagon or nobody in the executive suites of these companies look at this process and say, hey, maybe we shouldn't rely on giant metal paddles stirring explosive dough?
Right.
Maybe we should modernize this before we get into a conflict where we need thousands of these things in a hurry.
It is entirely rational when you look at the economic incentives of the defense sector prior to 2022.
Economic incentives.
Yes. Standalone solid rocket motor manufacturing was a notoriously low-margin, capital-heavy grind.
Okay.
Furthermore, government procurement operates on erratic, single-year congressional appropriations.
Ah, right. The budget cycle.
Exactly. If you are the CEO of a legacy motor manufacturer, you are not going to authorize $1 billion of your own capital to build a state-of-the-art automated factory.
If you don't know if they're going to buy any next year.
Right. If you have no idea whether the government is going to buy 50 missiles next year or 500, the capital expenditure risk is simply too high.
Because if Congress cuts the budget, you are left holding the bag on $1 billion empty factory.
Precisely. So they just milked the legacy assets. They ran the old machines into the ground because it was the financially safe play.
But then came the 2022 global wake-up call.
The war in Ukraine.
The war in Ukraine began, and the U.S. and its allies started shipping thousands of Javelin, Stingers, and GMLRS artillery rockets out of storage to support the theater.
We didn't just dip into our reserves. We emptied the warehouses at a wartime burn rate.
And when the Pentagon finally turned to companies like Aerojet Rocketdyne, the assets now becoming Axyv to refill those empty warehouses.
The legacy batch mixing lines were completely overwhelmed.
They literally could not mix, pour, bake, and X-ray the explosive rubber fast enough.
The physical constraint of the chemistry brought the entire vaunted defense industrial base to its knees. Like I said earlier, you cannot software update your way out of an empty magazine.
Which necessitates the massive modernization target we are currently analyzing.
Yeah.
This is the entire catalyst for Axyv's public market narrative.
Right. They are not just tweaking the recipe or buying a slightly faster X-ray machine. They are undertaking a sweeping, ground-up industrial overhaul.
They are aggressively scaling their manufacturing footprint to solve the physics problem.
Axyv is building out more than 1.5 million square feet of program-agnostic manufacturing space.
1.5 million. That's massive. And it's heavily concentrated in East Camden, Arkansas, right?
Yes, alongside supplementary sites in Huntsville, Alabama, and Orange, Virginia.
Now, the term program agnostic is doing a lot of heavy lifting there. What does that actually mean in practice?
It means breaking away from the rigid, single-purpose assembly lines of the past.
So historically, a factory line was built specifically to pour Patriot motors.
And it could only pour Patriot motors? If you suddenly needed Tomahawk motors, that line was useless.
Okay, so what does program agnostic mean?
It means they are shifting to automated, highly modular robotic assembly lines.
Robots pouring the explosive rubber.
Exactly. These robotic cells can rapidly swap out tooling to cast and cure solid propellant for a Patriot missile on a Tuesday and reconfigure to pour a GMLRS rocket by Thursday.
Depending entirely on immediate military surge requirements.
Exactly. They are digitizing the chemical casting process.
They are removing the human element from the hazardous mixing environments.
And they're automating the X-ray defect scanning, utilizing advanced machine vision to completely modernize the velocity of production.
Which all sounds great. But here is the massive macro tension of this entire deep dive.
The challengers.
Yes. Recognizing the weakness in Axyv's slow legacy methods, Wall Street and Silicon Valley aren't just sitting around politely waiting for Axyv to finish building better factories in Arkansas.
No, venture capital is actively trying to hack the bottleneck.
Which brings us to the private challenger threat matrix. We have to contrast Axyv's asset-heavy, legacy-entrenched model against aggressive, software-first, private tech startups.
These are companies built by engineers who look at the defense primes and see sluggish, bureaucratic dinosaurs ripe for disruption.
And the absolute apex predator in that specific ecosystem is Anduril Industries.
Anduril. The name comes up in every single conversation about defense tech right now.
It really does. They recently closed a massive Series H funding round, catapulting their private valuation to a staggering $61 billion.
$61 billion.
Yeah. They are extraordinarily well capitalized. They move at the speed of a software startup, and they are directly, unabashedly targeting the solid rocket motor market.
What is truly fascinating here is how Anduril is attacking the chemical engineering problem.
Right, because they aren't just trying to build a slightly better metal paddle, are they?
No, they are bypassing the legacy batch mixing vats entirely.
Wow.
Through their strategic acquisition of a specialized company called Adranos, Anduril is utilizing something called flak-tech centrifugal bladeless mixers.
Okay, stop. Bladeless mixers.
Bladeless.
So no giant metal paddles churning the explosive rubber and risking microscopic air pockets.
None.
How does a mixer without blades even work on something as thick as solid rocket fuel?
Think of it like a highly advanced centrifuge at a blood bank separating plasma, but operating on multiple axes simultaneously.
Oh, wow. Okay.
It is a continuous inline mixing process adopted from pharmaceutical manufacturing.
Pharmaceutical?
Yeah. Instead of mechanical blades that cause friction, generate heat, and risk cavitating the rubber to create air bubbles.
These flak-tech machines use intense centrifugal force.
Exactly. The mixing cup spins in one direction at extreme speeds, while the basket holding the cup spins in the opposite direction.
So the G-forces are literally shearing the chemical components together at a molecular level.
Without ever introducing a blade into the mixture.
That is wild. The dual-axis rotation creates immense internal shear forces that fold the highly viscous rubber, the aluminum fuel, and the AP oxidizer together perfectly in a vacuum environment.
And because there are no blades, there are no air pockets left behind a blade's wake.
And the data on this is incredible. This centrifugal process slashes the production time from hours of agonizing batch mixing down to just minutes.
Minutes instead of hours.
And it drastically reduces the defect rate, meaning the X-ray Q is significantly alleviated because the probability of a void forming is mathematically plummeting.
It's a huge operational advantage.
But it's not just the mixing process where Anduril is innovating. They also have a massive chemical edge.
Oh, yes. They own a proprietary patented fuel formulation known as Alitech.
Alitech. It's an aluminum-lithium alloy, right?
Yes.
Let's break down why adding lithium to the fuel is such a game changer. Because standard rocket motors use atomized aluminum powder as the fuel, right?
Right, to generate the extreme heat needed to expand the gases.
But Alitech swaps some of that out for lithium.
Lithium is a highly reactive, lighter alkali metal. From a thermodynamic perspective, when you alloy aluminum with lithium, the resulting combustion burns at a much higher thermodynamic efficiency.
And lithium is lighter, right?
Yes, because lithium has a lower atomic weight, it decreases the molecular weight of the exhaust gases.
And why does that matter for a missile?
Well, in rocket propulsion, lighter exhaust gases expelled at higher temperatures directly translates to a higher specific impulse.
Higher specific impulse essentially means better gas mileage for a missile.
Basically, yes.
The end result of this chemistry is that Alitech boosts the range of a tactical missile by up to 40%.
40%.
All while keeping the physical footprint, the exact size and shape of the motor, exactly the same.
Let's truly consider the strategic implications of that for a minute.
Yeah, please.
If you are a military commander in the Pacific, and your existing launch tubes can suddenly fire interceptors that fly 40% further without having to buy new ships or new launchers.
You have fundamentally altered the tactical geometry of a battlefield.
Exactly.
Yeah.
You have pushed the enemy's ships 40% further away from your shores. That is a massive, paradigm-shifting technological value proposition.
And Anduril is proving it out in the real world. The execution hurdles are being cleared rapidly.
They aren't just making PowerPoint presentations about chemistry.
No. Saab, the massive European defense contractor, recently selected Anduril to manufacture the rocket motors for the ground-launched small-diameter bomb, the GLSDB.
Right. And Anduril is actively scaling a massive facility in Mississippi designed to produce up to 6,000 tactical rocket motors a year by the end of 2026.
To go from a standstill, acquire a chemical company, build a factory, and scale to 6,000 motors a year in roughly an 18-month time frame is just an incredible feat of process engineering.
It is. However,
there's the however.
As financial investigators, we have to weigh this astonishing technical speed against the real-world physical limits and the deeply entrenched bureaucratic realities of the defense sector.
Right, because the qualification moat rears its head once again.
It always does. Software-first timelines hit a hard, unforgiving wall when they collide with volatile chemistry and legacy platforms.
So Anduril's Alitech fuel is undeniably superior in thermodynamic performance.
But it is a novel chemistry. It burns hotter.
And you cannot just drop a novel, hotter-burning fuel into a legacy platform like a Patriot or a Terrad interceptor without entirely re-engineering the missile's thermal protection systems, right?
Or its internal wiring and its flight software.
The recertification loop. If it burns hotter, it might melt the Patriot's guidance fins. So you have to redesign the fins, which means you have to retest the aerodynamics, which takes years.
The multi-year, multi-million-dollar recertification loop, Anduril cannot easily penetrate that moat for legacy systems.
So they are locked out of the current stuff.
For now, yes. They will absolutely dominate the next generation of weapons, the modular, autonomous loitering munitions that are being designed from scratch today.
But they cannot immediately step in to satisfy the near-term national surge requirements for the core weapons the military is burning through right now in active theaters.
Exactly.
You know, I look at it this way. Anduril is the sleek, high-margin carbon fiber speedboat.
Right.
They are out there 3D printing the future, moving incredibly fast, innovating on the fundamental chemistry, and winning the PR war. But Axyv is the massive, heavily armored cargo ship. Axyv owns the legacy API that the entire current military architecture is already coded to.
That's a great way to frame it.
If you want to resupply the existing fleet today, if you need a Patriot missile tomorrow to defend a base, you have to load your crates onto the cargo ship.
Axyv is the sole provider capable of meeting the immediate volume requirements of the established defense architecture.
But returning to the core tension of our financial investigation, building that massive cargo ship, or in this case, 1.5 million square feet of automated robotic factories in Arkansas, destroys cash flow.
It requires billions of dollars in upfront capital expenditure.
Which brings us to the most mind-bending part of this entire deep dive.
The forensic balance sheet arbitrage?
Yes, because Axyv didn't have the cash on hand to build these robotic factories.
And their parent company, L3Harris, certainly didn't want to ruin their own pristine balance sheet and anger their shareholders by taking on massive debt to do it.
So where did the money come from? enter the ultimate sovereign backstop.
This is where we transition from chemical engineering into elite, highly structured financial engineering.
I love this part.
We need to perform a strict forensic audit of the capital mechanics underlying this spinoff because it dictates the entire valuation model.
So the filings detail an unprecedented move by the Department of War. A $1 billion direct-to-supplier investment.
The Pentagon didn't just order more missiles and hope Axyv used the profits to build a factory.
No. They literally wired $1 billion of taxpayer money directly into Axyv's balance sheet to pay for the modernization.
Under their new acquisition transformation strategy and the Go Direct-to-Supplier initiative, the government utilized a specific legal authority known as the Industrial Base Analysis and Sustainment Program.
IBS. Yes. Okay.
This allowed them to bypass the Tier 1 prime contractors entirely and inject capital straight into the Tier 2 bottleneck.
But I have to stop and show some genuine skepticism here.
Go for it.
The corporate press releases are all championing this as a brilliant strategic partnership. But let's call it what it is.
Okay.
Is this highly praised strategic partnership actually just a $1 billion federal bailout?
A bailout.
Yeah. I mean, the government essentially let the supply chain rot for 30 years.
Right.
They forced companies to consolidate. They starved them of multi-year contracts. They incentivized them to use manual mixers from the 90s.
And then they panicked when the warehouses ran dry.
Exactly. And they had to hand over $1 billion of taxpayer money to fix the exact mess they created.
Well, you are identifying the exact structural paradox of the defense industrial base.
Thank you.
It is a bailout of a critical national security node, yes. The government recognized a single point of failure and threw money at it.
Right.
But the way this capital injection is legally structured is an absolute masterclass in corporate liability shielding by the parent company, L3Harris.
Because the Pentagon did not just hand them $1 billion grant.
And they didn't issue standard debt either.
No. They structured this $1 billion as a Series A convertible preferred security.
Right.
Okay, let's slow down and explain the mechanics of a convertible preferred security.
Yeah.
Because this is where the financial alchemy happens.
Well, preferred stock is a class of ownership in a corporation that has a higher claim on its assets and earnings than common stock.
But crucially, this specific security was issued at the subsidiary level.
Yes, directly into the newly formed missile solutions business, Axyv. It was not issued at the parent level of L3Harris.
Why does that distinction matter so much to an investor looking at L3Harris right now?
Because it totally insulates the parent L3Harris shareholders from near-term equity dilution.
Oh, I see.
If the government had bought $1 billion of L3Harris stock, the existing shareholders would see their ownership percentage instantly diluted.
Their slice of the pie would get smaller.
Exactly. By injecting the capital strictly into the Axyv shell, L3Harris gets the cash required to rebuild the factories and fix the bottleneck without ever diluting its own publicly traded stock.
Okay, so Axyv takes the $1 billion, builds the automated factories in Arkansas, transitions to robotics, and fixes the bottleneck. But the government is still holding this preferred security on the books. What happens to it when Axyv goes public?
The definitive agreements in the SEC 8K filings explicitly outline the conversion mechanics.
And what do they say?
The preferred stock automatically converts into standard common equity upon the completion of Axyv's initial public offering.
But here is the vital, highly lucrative detail for the government. It converts at a mandatory 20% discount to the final IPO offering price.
A 20% discount.
So let's visualize day one of the IPO. If the investment bankers price the IPO at $100 a share, an institutional buyer or retail investor is paying $100.
But the government's preferred shares automatically convert as if they bought in at $80 a share.
It establishes an immediate protective floor for the sovereign anchor capital.
The government secures a built-in 20% equity cushion the absolute second the stock begins trading.
This is wild to think about from a retail investing perspective.
How so?
Well, Wall Street investors who buy into this IPO aren't actually paying for the risk of factory construction.
No, they aren't.
The taxpayer already paid the $1 billion to build the robotic assembly lines. The public market investors are just paying for the future automated cash flow that those already funded factories will produce.
It is the absolute definition of de-risked capital expenditure. The government absorbs the heavy lifting, modernizes the physical footprint, and then allows the parent company to bring a shiny, upgraded, fully funded asset to the public markets.
Which leads us perfectly into the capital allocation and the carve-out playbook.
Yes.
With the factories funded by the taxpayer, L3Harris is now bringing this asset to Wall Street to extract maximum multiple value.
We really need to dissect the near-term public market financial targets for this entity because the numbers dictate the valuation multiple.
Let's lay out the timeline and the baseline. The filings indicate a late 2026 initial public offering.
Some of the institutional updates suggest the roadshow could launch as early as next month, August 2026.
Wow, that's fast. And the syndicate is being led by absolute heavyweight underwriters, right?
JP Morgan Chase and Morgan Stanley.
And they are targeting up to $2 billion in fresh public capital from the float.
Now, to justify a $2 billion capital raise, you cannot present a stagnant, low-margin business.
No, you need a highly profitable, accelerating baseline.
And L3Harris unmasked that baseline in their Q1 2026 financial reporting cycle, pulling the curtain back on Axyv's standalone performance.
And the numbers are staggering for a business that used to be considered a low-margin grind just a few years ago.
In Q1 2026 alone, Axyv brought in $1.0 billion in revenue,
Which is up 18% year over year.
More importantly, their operating margins expanded to 12.5%, largely driven by the early efficiencies of the new automated lines.
If you annualize that quarterly performance, you're establishing a forward annual run rate of $4.0 billion in revenue.
And roughly $500 million in operating profit, or EBIT earnings before interest and taxes.
$4 billion in revenue and $500 million in pure operating profit. So how does Wall Street value an asset like that?
Well, this is where we discuss valuation arbitrage and why parent companies love spinoffs.
Walk you through it.
In the defense sector, diversified prime contractors, companies that make everything from radios to naval ships to satellites, usually trade at standard, somewhat suppressed multiples.
Like around 16 to 22 times their earnings, right?
Right. They suffer from what is known as a conglomerate discount. The market penalizes them because they are too sprawling, capital is often misallocated between divisions, and the tracking metrics are opaque.
But pure-play component providers, companies that do exactly one critical thing, command scarcity premiums.
Exactly. When you isolate a highly specific, universally required bottleneck, a pure-play utility, the market assigns a massive premium because there is no other way to invest in that specific growth vector.
The closest functional equity analog in the current market is a company called Karman Space and Defense, trading under the ticker KRMN, right?
Right.
Looking at Karman, they command multiples in the 26 to 28 times price-to-earnings range. That is a massive premium over a legacy prime.
So if we apply a slightly conservative 24x to 26x PE multiple to Axyv's projected $500 million profit engine, it implies an initial enterprise value floor of $5.0 billion to $7.0 billion right out of the gate.
And here is the genius of the conglomerate discount escape. To ensure Axyv gets that high multiple, L3Harris had to clean up the balance sheet.
They surgically stripped out the low-margin civilian stuff.
Prior to this spinoff, L3Harris sold off the legacy NASA space programs, the liquid propulsion lines for the Artemis moon rockets.
Which are prestigious, sure, but notorious for cost overruns and low margins.
They sold those to private equity. They kept only the high-priority, high-margin defense assets. Tactical missiles, hypersonic ramjets, and strategic ICBM boosters.
They packed all the good, highly profitable stuff into Axyv to force the market to assign it a massive tech multiple.
It is a deliberate, highly engineered corporate carve-out designed to maximize shareholder value.
But the structure of ownership post-IPO is the most critical detail for an individual investor to understand.
This is the observation that really stood out to me when reading the prospectus. It's the illusion of independence.
Yes.
The financial media headlines will scream, Axyv goes public, a new defense unicorn.
But L3Harris is retaining an 80+% equity block.
They're keeping overwhelming majority control.
They will continue to consolidate the financial results of Axyv onto their own parent balance sheet, boosting their overall corporate metrics.
So if you're an investor looking at this, I want to highlight the dynamic clearly.
Please do.
L3Harris is selling a tiny fraction of this company to the public to create hype, to raise $2 billion in cash, and to get Wall Street to print a 25x multiple on the stock.
Which mathematically boosts L3Harris's consolidated valuation.
All while quietly keeping 80% of the voting power and absolute strategic control. You, as a retail investor, are essentially just buying non-voting cash flow tracking units.
You have no say in the boardroom.
It is a fascinating dynamic. You are buying into a de-risked, sovereign-backed cash machine, but you have absolutely no influence over how the company is run.
The parent company and the Pentagon dictate the terms, and you are just along for the ride.
So synthesizing all this data, The chemistry, the venture capital threats, the forensic accounting, we arrive at the final verdict.
The ultimate question.
Right. The ultimate question for you, the listener. Should you allocate capital here?
We must assess whether this irreplaceable component utility represents an elite structural value play at these projected valuations.
Or if the hidden risks outweigh the sovereign backing.
To bring back your summary analogy from earlier, Axyv functions as an unassailable sovereign-backed physical toll booth.
The entire traditional defense prime network, the Lockheeds, the Raytheons, must legally pass through this toll booth the moment a Patriot or THAAD missile is ordered.
Anduril might be building the speedboat of the future, but Axyv is the cargo ship carrying the ammunition for the wars of today.
However, a rigorous financial investigation must define the execution risks.
We cannot just look at the $7 billion valuation floor and ignore the fragility of the underlying mechanics.
There are three primary execution risks to note here that could compress that valuation. Risk number one, sub-tier supply chain dependencies.
We talked about automating the factories in Arkansas, but Axyv is still fundamentally a chemical bakery.
And they rely heavily on one specific, highly volatile ingredient.
Ammonium perchlorate, or AP. As we established, it comprises 70% of the solid propellant mass.
And currently, there is a single-source private monopoly on domestic AP production.
It is held by the American Pacific Corporation, AMPAC, operating out of a single primary facility in Utah.
The absurdity of this is staggering to me.
It's definitely a bottleneck.
The ultimate bottleneck of the entire U.S. military has a bottleneck of its own. If AMPAC experiences a facility fire, a labor strike, or a localized chemical spill in Utah,
Axyv's state-of-the-art robotic assembly lines in Arkansas will grind to a halt within weeks.
completely, regardless of how much capital the Pentagon provided, you cannot bake a cake without flour.
Exactly. Risk number two is structural. Total reliance on a single monopsony government buyer.
Monopsony, meaning a market with only one buyer.
Right. Axyv has one domestic end customer, the U.S. military.
So if geopolitical tensions suddenly cool, or if a new administration enacts severe defense budget slashes to balance the deficit,
Or if the military pivots entirely away from kinetic missiles toward directed energy weapons like high-powered lasers.
Axyv's order book evaporates overnight. You are entirely tethered to the political will of the state.
And finally, risk number three. Near-term inflationary pressures eroding legacy fixed-price aerospace contracts.
This is a critical margin risk that Wall Street often overlooks. Many legacy defense contracts currently sitting in Axyv's backlog were negotiated on a firm fixed-price basis years ago.
Before the current inflationary environment.
Right. As macro inflation drives up the cost of highly specialized labor, raw atomized aluminum, and volatile chemicals.
Axyv must absorb those cost overruns themselves. They cannot legally pass them back to the Pentagon on a fixed-price contract.
While the $1 billion factory upgrade will undoubtedly improve long-term efficiencies, those near-term fixed-price contracts could severely compress operating margins below that advertised 12.5% mark during the initial, highly scrutinized quarters of public trading.
So you have sub-tier supply chain monopolies, a single political buyer, and margin-crushing inflation risks.
But on the other side of the ledger, you have a $7 billion valuation baseline, a 20% government discount floor providing institutional confidence, and a completely inelastic demand cycle for at least the next 5 years as global warehouses restock.
It's a remarkably complex setup. It requires a highly disciplined approach to valuation.
The upside is structurally guaranteed by the Department of Defense's multi-year procurement framework, but the ceiling is tightly capped by the parent company's retained control and the unforgiving physics of chemical manufacturing.
Which brings me to a final provocative thought for you, the listener, to mull over as we wrap up this deep dive.
We have spent the last hour breaking down a company where the government is your only customer, your primary safety regulator, overseeing every step of the chemical process, and a massive equity holder, legally structured to get a mandatory 20% discount on your stock.
In a setup like that, does true free market price discovery even exist for this asset?
Or are public market investors just trading a synthetic derivative of the Pentagon's budget?
It is a question that challenges the very nature of public equity in the modern defense sector.
Risk defined, portfolio protected.